Hello there, good evening and welcome to another episode of Business Focus here on TV3 with me, Michael Obodu. Coming up tonight on the show, surging fuel prices projected to trigger imminent uptick in domestic production cost and headline inflation. We ask, what specific fiscal interventions or monetary policy adjustments should government implement? Also ahead of the program, President John Mahama declares Ghana's shift from raw material exports to a high-value production hub in agriculture and manufacturing. He was speaking at the Ghana UK Investment Forum currently underway in the UK in London. We're bringing you coverage, a wrap of how that particular event has gone and his presentation on the day. But this is Business Focus here on TV3. With me, Michael Obodu. Every day, people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. So here's one you would always want to remember: star 770 hash. Yes, star 770 hash is a new EcoBank money emergency number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need for you to panic. When you find yourself in any money emergency, EcoBank will always come to your rescue. So dial star 770 hash now for solutions to your money emergency. EcoBank, the Pan-African Bank and proud sponsor of Business Course, as well as Telecel. Now let's bring you updates from the currency, the commodities market, as well as the treasury bill front. Well, the dollar currently is selling for 11 cedis, 75 pesos. The pound is going for 15 cedis, 80 pesos. The euro is going for 13 cedis, 66 pesos. We'll be guided that these figures will be much higher at a forex bureau near you. Let's bring you updates now on the global commodity front. Well, cocoa is down by $19. It's trading at $3,904. Gold is at 65. Shetsam $65. It's trading at $4,475 per ounce. Crude oil is up by $5. It's selling at $96.15 per barrel. We're seeing the inverse relationship again come to fore between gold and crude oil. We'll see if issues will settle with crude, if we'll go back to the low 90s, or still going to keep rising as the tensions between US and Iran links. But on the treasury bill front, government another under subscription. Quite interestingly, 91-day bill at 4.99%, 182-day bill 7.04%, 364-day bill at 10.45%. We'll see if government will be able to return to its winning ways of over-subscriptions. But this is Business Focus here on TV3 with me, Michael Obodu. We'll go for a quick break. When we come back, we'll delve into our topic for today. Please don't go anywhere.
Hello, my name is Pamela from Customer Service. Please read.
In a world full of noise, clarity matters. Stories shape us, ideas challenge us. An honest dialogue moves us forward. This is a space for depth, where voices are heard and perspectives matter. Conversations with Dr. Abinanya Kwasmini, coming soon on TV3.
TV3, first in news.
Ghana's Most Beautiful is 20 years, and to kickstart the special anniversary season, you are warmly invited to an exclusive royal ball and fundraiser for a legacy project. An evening shared with our cherished partners, distinguished past queens, and the remarkable individuals who have shaped this journey over the years. Join us at 8 p.m. sharp on the 6th of June at the Adisa Pavilion within the prestigious Labadi Beach Hotel. Red carpet is live at 6 p.m. Come for the elegance, stay for the purpose, be part of the legacy. Ghana's Most Beautiful, 20 years of culture Grace and Legacy. This event is strictly by invitation.
In a world full of noise, clarity matters. Stories shape us, ideas challenge us. An honest dialogue moves us forward. This is a space for depth, where voices are heard and perspectives matter. Conversations with Dr. Abinanya Kwasumini, coming soon on TV3.
TV3, first in news.
Ghana's Most Beautiful is 20 years, and to kickstart the special anniversary season, you are warmly invited to an exclusive royal ball and fundraiser for a legacy project. An evening shared with our cherished partners, distinguished past queens, and the remarkable individuals who have shaped this journey over the years. Join us at 8 p.m. sharp on the 6th of June at the Adisa Pavilion within the prestigious Labadi Beach Hotel. Red carpet is live at 6 p.m. Come for the elegance, stay for the purpose, be part of the legacy. Ghana's Most Beautiful, 20 years of culture, grace and legacy. This event is strictly by invitation.
In a world full of noise,
Welcome back. This is Business Focus here on TV3 with me, Michael Obodu. Now, every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. Many Ghanaians don't know their emergency numbers. Well, here's one you'd always want to remember: *770#. Yes, *770# is a new EcoBank money emergency number. *770# gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need for you to panic when you find yourself in any money emergency, because EcoBank will always come to your rescue. Dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank and proud sponsor of Business Focus, as well as Telecel. Now to our substantive discussion for today, the issue of fuel prices at the pumps, which have risen again following the National Petroleum Authority (NPA's) announcement of an upward adjustment in the price floor of petroleum products. Now, some market leaders, including Star Oil, have increased the price of petrol to 15 cedis 20 pesos per litre, while diesel remains at 15 cedis 81 pesos per litre. Surging fuel prices projected to trigger imminent uptick in domestic production cost and headline inflation. Given this projected outlook, what specific fiscal interventions or monetary policy adjustments should the government implement immediately to cushion local manufacturers and prevent these rising production costs from being fully passed on to the consumer? Well, joining us for a conversation are President of the Ghana National Chamber of Commerce and Industry, Stefan Abbas Miezan. Also joining us, Senior Fellow at Africa Policy Lens, Dr. Eric Boache-Yadom, and the Executive Secretary of the Chamber of Petroleum Consumers Ghana, Kopek Duncan Amwa. Gentlemen, thank you so much for your time. I'll start off with you, Abbas Miezan, President of GNCCI. For you as industry, how do you feel about this whole hike in fuel prices? How much of a concern is it for your members?
Good evening, Michael. Good evening to our cherished listeners. Let me drive straight to your question. This is not good news for the private sector, in the sense that, when prices of fuel goes up and petroleum product goes up, it has huge negative effects on industry, and therefore also on consumers. So for organizations that have to use fuel for production, generating power, even ECG that will supply power to our household, which uses fuel, means that cost of electricity, even for the household, goes. So this is not good news at all for the private sector in general, and also for the consuming public at large. But let me say that the increase in the petroleum product has a double-edged effect, especially for a country like Ghana, which exports crude oil. But in its negative effect, its total effect is rather negative on the consumer public, even though physically Ghana will be earning some revenue. But there's going to be a lot of pressure on our currency, as much, and fiscal constraints is also there. So we need to. This is not good news for us.
All right. So, Dr. Boache-Yadom, we heard from industry. This is not good news. Cost of production going up for them. We know one of the critical factors for this increase that we've just experienced is the depreciation of the local currency. From where you sit, what can government do on the currency bit to sort of cushion consumers even further?
Thank you, Michael. I think that government changed the approach that was used last year in terms of slowing down the dollar injection to probably see if the economy is able to stand on its feet without undue forex intermediation or intervention. We can see clearly that the market is unable to stand on its feet. There's the more reason why we're asking government to prioritize investment in key areas to minimize our demand for dollar products, especially if we're running a very high import-driven economy. If you want to be able to reduce the pressure on your currency, then we should be able to have an import substitution. But in the last, let me say, 1 year, we have not been able to do that. So there is a direct effect, on the prices will translate into a hike in price to the average Ghanaian. What government should do, is to try and find substitute. I don't know how it can be done, because we had opportunity to invest in key areas last year, and I'm afraid to say that we didn't do much. And that is why the impact is very significant at this moment. And Michael, you will agree with me that if we look at the trend in the fuel prices, even last year when we recorded disinflation up to February, where we got around 3%, generally the cost of living was high. Although the numbers were going down, but it was not reflecting in the market. And Ghanaians generally have the traders, let me say, businesses have the attitude of holding on to prices, even though inflation is coming down. Well, we don't expect a drastic fall in price, per the general understanding of inflation. We're expecting some level of price stability. So when there was even significant fall in the value of the dollar that we're expecting it to translate on the market, many sellers or many traders kept their prices at where it was without significantly changing it. And now that fuel prices begin to pick up, you will see that they will rather, when there's an increase in fuel prices, price adjusts upwards quickly. But when there's a need for price to come down, price rather stays stable. So generally, consumers will be the hardest hit. Although industries is expecting prices of production to go up, but if we look at the elasticity of demand, usually it is pushed towards the consumer. So consumers should be expecting that the price generally will be going up. And it's unfortunate that goods that, especially agricultural produce up north, maybe to bring the goods down here, it is going to be more expensive, So we are going to get to a time where the food is available, but the prices will be very, very expensive because it will go into transportation cost. This year, the rains are very, has been favorable, so yield generally we're going to go up for us to get probably enough harvest, to bring down food price inflation down. But looking at what is happening to fuel prices, the price build-up will go into transportation, which will make food prices very, very expensive. In the worst-case scenario, if we don't take care, most farmers who may not have the funds to transport their goods to nearby market to have their food post-harvest losses, get stuck in the farm. So there's a serious concern that I think the government need to maybe sit down a bit and look at how these challenges can be dealt with.
Sure thing. We also have Duncan Amma, the Executive Secretary of the Chamber of Petroleum Consumers Ghana, COPEC. Duncan, thank you for joining us. You had, at the early stages of this whole tensions in the Middle East, stated that even if the war ended today, we should expect prices at the pumps to be relatively high still. Do you still stand by that point?
Well, Michael, what generally informs fuel price, and that is, you're talking of not crude, but the finished product. Then you are looking at the cost of the base product, which is the crude product. Then you are also looking at tolling or the refining charge. Then you put in some other premiums. That is the logistics involved in moving crude from one point to the other, ensuring that whatever goes through the refinery, there's some, guarantee that whatever assay or product yield you derive from the refinery, it will not come to losses. So if you put all these together, and the fact that the cost of crude itself, being one component, is high, then prices will likely be high for some time. Again, in the event that you even have crude coming in because the Strait of Hormuz, there's a cessation in hostility on the straits, chances of, the world stock levels getting back to the February 28 era is not going to be immediate. It could take 3 months in the minimum, according to some reports that we have chanced upon. Should the US and Iran come to a deal today, you are not looking at the levels, the stock levels that we had returning to, those levels anytime soon. And that would mean that the demand will continue to outstrip supply, and that would mean that higher prices would continue to persist. And so these are not signs of, a one-off, is it a cost push factor that Ghanaians would have to deal with. We may live with higher oil prices for some time, even if the war came to an end today. And so when you listen to the Ghana National Chamber of Commerce, my brother earlier, these portend some, subliminal increases in their operations. And for us, we'll just have to be very candid with ourselves as a people. You cannot expect at this point that cost of goods and services may be coming down, because globally, it is the trend everywhere. In the United States, where fuel was trading for generally $2.30, you are looking at 4 now. There are fears that it could even go beyond the 4 at some point. And so things are generally expensive. And I think that consciously, we should, as a people, also wake up to the realization that prices are not coming down anytime soon. In the worst case scenario, if the city is not also managed the way we saw in 2025 to be stable, and the city also begins to lose ground to the dollar, then the situation could be quite, I mean, a bit hostile. But as it stands, we are likely to live with these higher fuel costs for some time. And I think that for industry that would depend on RFO to be able to do their processing, chances of their, incurring additional costs to manufacturing would continue to be rife. But for these ones, Michael, I would think that times like this will call for some negotiated deals, particularly with the power sector, such that, they don't bear all the costs, particularly with even the refineries who sell RFO to these industries to be able to turn on their engines or plants. Maybe some negotiation would have to be carried out if the interventions that the government threw in for diesel when prices went to 16, 17 could be considered for some of the industrial products like RFO around this time, with a view of making manufacturing a bit easier on the Ghanaian economy. We should begin looking at some of those things. But the good news again is that the government, from what I gather as of this morning, is that they are also looking at even making crude available to some of the local refineries so that the effect could be mitigated a bit. How that program goes, Michael, only the coming weeks would be able to determine. But if we don't see the cost of, petroleum products either stable or decline, even after taking our Jubilee and 10 fields crude to be processed locally by the local refineries, then that whole innovation would have been an exercise in futility. And I think that the refineries that are being given these products should know that the Ghanaian people are keenly observing to see what collateral impact or effect would all derive from these interventions that the government is deciding to put in.
All right. Duncan, I'll come back to you shortly because I know that there's been some engagement between government and GPRT. I know you're a key stakeholder in such conversations. You help us understand what the sentiments are really in this engagement and where it is really leaning towards. I'll come back to you shortly on that, but let me speak to Abbas, president of GNCCI again. Now, realistically, for you as industry players, what practical solutions are you expecting from government to help mitigate the impact of this hike in fuel prices?
All right, so Michael, exactly what I was thinking about. What I'm saying, what Duncan was saying, what Dr. Boachi is saying, we are basically saying the same. But what then is the next step? Is exactly a question asked. So for me, government intervention for industry, okay, subsidies for industry. We are looking at the cost of transport will go up, but if we improve upon our road infrastructure, that means that the vehicles which will even be bringing food from the farm gates to the industry, to the marketplace, will not have to go through a lot of maintenance and how to end up buying what they call spare parts, because at the ports, duties are going to go up. If duties go up, it means that the private sector transfers that to the consumer. So we need to improve upon our infrastructure as such. Then also we need to look at tax incentives. Looking at all these things that are happening, all the costs cannot be passed on onto the consumer. So the government needs to take up certain actions that would mean that it's absorbing some of these costs. Other than that, life will become very unbearable for the consumer and also the manufacturer as well, considering all this happening. So yes, government needs to come in some of these things, subsidies, tax incentives, improvement in our infrastructure, as well as I was talking about, and then interest. I know that interest rate will be going up because there will be inflation, and the only way inflation can be controlled is one of the ways that it can be controlled is by increasing interest. But that also means that the private sector is crowded out of borrowing to be able to expand and create jobs for the youth, which are the teeming youth, of which we have so many of them. So it is very important that the government steps in with very prudent measures that will help industry exist and survive this difficult times. And like Branka is saying, we are going to see this trend in the long term. Even if the US and Iran comes to an agreement, we are not seeing a relief of this effect for the next 3 to 6 months. So what does the government do? The government needs to come in forcefully with some of these suggestions, interventions to ensure that the private sector is relieved of this situation. That's what I would advocate.
Okay. Now, for you, Dr. Eric Boakye-Adom, you had mentioned that last year, one of the reasons why the cedi was stable was due to government's intervention, some say intermediation on the money market. Do you think that that move is justified now, and probably we should consider going back to that approach to stabilize the cedi, because we've seen quite a significant depreciation since the start of the year till now, which has contributed to the hike in prices of the pumps? Dr. Boakye-Adom, if you can hear me.
Yes, Michael.
Yeah, I can hear you now. Please go ahead.
Yeah, so you cannot support the economy and the economy such that to be able to support itself. You know, and what is happening now, it is normal in every economic trend. I mean, like we say, good time precede bad times. In the same way, bad time precede good times. So you can see that if you model the inflation curve, it goes up, then it comes down, now it's going to pick up again. So it's a normal thing that we should have expected. I have always maintained that last year gave us the opportunity to structure the economy and invest in key sectors rather than propping up or continuous injection of over 10 billion to support the cedi. So if we have to do the same thing again this year, it means that we'll need about over 10 billion to support the economy. I mean, in terms of the dollar, and which is very expensive. Remember, we were on IMF program.
Did you say 10 billion?
Or $3 billion.
But would that be factual? Because remember that last year, the depreciation was from a 14 to about 10. Now we are hanging around 11.7. So if we want to, for instance, get it to go back to 10, we wouldn't need as much as the 10 billion you're referring to, or?
No, I am referring to what was done last year. They reported within the 8 months that what was suggested was 10 billion. And remember, it was taken, the dollar was around 14. Then we had to, government was able to bring it down to somewhere 10, 11, thereabout by the close of the year, you know. And currently we are doing around 12. If we use the Forex, we are doing around 12.5, 12.4. I mean, so if government needs to continue the injection, I think that it will take funds from key sectors, or it will take attention from key sectors. No, we are now seeing the true state, and it's telling government what to do, that the things that we keep importing, for example, the fuel we keep importing, we were told that toy is back on its feet and toy is working, but I don't see, maybe my friend Duncan will tell us the volumes that toy is able to process. If we're able to get toy to work on a full scale, that minimizes our dependence on importing this forward. It means that we have solved a greater part of the challenges, and we wouldn't have to change so much to BDCs to import this forward. That would be one way of solving the challenge, rather than focusing on injecting. Yes, injecting is short term, you will do well. The city will appear to be doing, but in the long term, we will come back to this conversation. And this is what we kept saying since last year. Michael, I think that for government should have, short term and long term approach. One of the things that government did last year, which is the injection, was a short-term approach, and it has proven that it's not success. It will not be successful in the long term. Another thing that I think government can consider, is to improve our transportation system. My colleague mentioned about government roads and all that. Yes, it's something that government should consider investing heavily to make sure our roads are working. But I also think that the government acquires about 200 buses. I don't know when they will start working. By bringing these buses, it also, in a way, creates sort of competition for the GPRTU so that they don't also hike their prices too much. So government should focus on improving public transport. When public transport is even improved and is better, people who drive by themselves will end up even putting their car down or placing their car down and joining public transport. People drive basically because it's inconvenient trying to catch structure. You have to join long queues, which brings delay. But if the public transport, starts working. Some years ago, we were trying to start BRT, with the metro mass. It didn't really work, but I think we can start again for public transport to improve. Additionally, I don't know the key idea of the price floor that was set for the oil marketing companies. In a free market economy where we want competition to drive price, I'm sure that if not price floors, oil marketing company like Star probably will not increase the price up to about the 15 that we are seeing currently. So I don't really know why we went into the price floors. I think that if we are dealing with a free entry, free market economy, you should be able to allow competition to make either price stable, or it also improve creativity. That is there any other way? Instead of hiking prices, we can look at our cost management. But I'm talking to the oil marketing company, managing your cost effectively to reduce costs so that you can still make up, rather than looking at increasing prices anytime global oil price go up. So we have to really think through critically. I've spoken about the toll issue and the transportation. In the long term, I think our way out of this is to ensure that factories that are supposed to producing import substitution goods are working. And I say that we are experiencing all this because the government flagship program, has not started. If this program come upstream, the push supporting industries, expanding industries to produce those goods that we depend on. If these things, we fail at these policies, then the challenges we went through 2021, 2022, it is going to be worse, I'm afraid, to say.
Interesting. You're still watching Business Focus here on TV3. We are going for a quick breather. When we come back, we'll continue our conversation. Please stay with us.
Hello, my name is Pamela from Customer Service. Please revalidate your account by texting your Ghana.
In a world full of noise, clarity matters. Stories shape us, ideas challenge us. An honest dialogue moves us forward. This is a space for depth, where voices are heard and perspectives matter. Conversations with Dr. Abnanya Kwasmini, coming soon on TV3.
TV3, first in news.
Ghana's Most Beautiful is 20 years, and to kickstart the special anniversary season, you are warmly invited to an exclusive royal ball and fundraiser for a legacy project. An evening shared with our cherished partners, distinguished past queens, and the remarkable individuals who have shaped this journey over the years. Join us at 8 p.m. sharp on the 6th of June at the Adisa Pavilion within the prestigious Labadi Beach Hotel. Red carpet is live at 6 p.m. Come for the elegance, stay for the purpose, be part of the legacy. Ghana's Most Beautiful, 20 years of culture, grace and legacy. This event is strictly by invitation.
In a world full of noise, clarity matters. Stories shape us, ideas challenge us. An honest dialogue moves us forward. This is a space for depth, where voices are heard and perspectives matter. Conversations with Dr. Abnanya Kwasmini, coming soon on TV3.
TV3, first in news.
Ghana's Most Beautiful is 20 years, and to kickstart the special anniversary season, you are warmly invited to an exclusive royal ball and fundraiser for a legacy project. An evening shared with our cherished partners, distinguished past queens, and the remarkable individuals who have shaped this journey over the years. Join us at 8 p.m. sharp on the 6th of June at the Adisa Pavilion within the prestigious Labadi Beach Hotel. Red carpet is live at 6 p.m.
About the posturing of GPRTU in their interactions with the Transport Ministry. What's the sense you get from your gleanings from these conversations, which I know you are privy to?
Michael, you are dealing with a cost push factor here. In fact, if you deal with the transport operators, as we deal with them directly, day in, day out, you would realize the main reason for which a lot of them cannot even replace their buses when they get old is that the returns on those investments are usually quite pitiable. They don't get anything at all. You could invest a couple of tens of thousands or hundreds of thousands. What you get daily is a few hundreds or a few cedis in return. And then you get to the market and the cost of everything is quite high, ranging from your running cost to the cost of parts and maintenance. So things become quite difficult for the drivers, as and when they continue to be stagnant in their charging, and then they get nothing at all, both to the investor who put in the money and to the driver who is out there as early as 4 or 5 a.m. trying to get something, from the day's efforts. Michael, I think that we should, just like Dr. Eric Boache indicated, we should decide as a people that certain things would have to be done, and it must be done such that the roads are good enough, and that the driver doesn't have to stay in traffic for 3-4 hours just to be able to conclude a trip. If that happens, the cost to the driver is quite high. And don't forget, in Ghana, our charges are not sometimes standardized. And so if it is 10 cities to move from, say, 37 towards Medina, a trip that should ordinarily take you about 20-30 minutes, you may end up doing 2-3 hours because of traffic conditions. The driver would have to bear that cost eventually. And so I am thinking that, of course, we have proposed already with the GPR to you just last week to start working a model, a mathematical model that helps them, just like the petroleum sector has, which allows you to be able to determine the cost per liter per kilometer. And so you know that if the oil tanker moves 156 kilometers, there's, X amount that you pay. If it goes beyond 250, there's Y amount that it attracts. If it goes beyond 300 or 320, there's, a certain amount that those are standardized. Those are mathematically proven. You can be able to deduct the cost of investment and everything. But when it comes to the Ghana Private Road Transport Union and, the other private transport operators, we simply leave them to their fate. We would rather call them and then, without any, of course, scientific basis, insist that, oh, don't go and charge 10% or 20% is too much, take 5%, without due regard to the fact that if they are unable to get any good returns on their investment, even the cost of maintenance would be ignored, and that will come with a price to all of us on our roads. And so I am thinking that whilst the cost to these drivers continues to be quite high, and yet when it comes to their charges, we would still want to be able to dictate to them. Perhaps the state and all of us civil society actors should be interested in gravitating towards a more scientific basis of determining the cost per head per kilometer in this country.
Sure.
As and when traffic surge, and at some point you heard commuters say that they will close and there's so much and the drivers are not moving and cars are not available and people talk of sabotage. I do not think that if there was, a scientific way of determining our fares in this country, we'll be stuck, the way we are stuck. You ply the Ghanaian roads, and most of the public transport buses are quite old, worn out. Some of them are really, really, really not, good enough to carry humans, but they don't have the means to be able to replace them because we are already debating with them on 5%, 10%, and we think that the public good simply means paying lower fares. But it does have an economic impact on all of us eventually. And I think that going forward, of course, we will be working hand in hand with the GPRTU to try to get to a more scientific way of determining fares in this country so that as and when fuel prices go up, which is one of the key components, Michael, when you input, the cost of Y, if it changes the whole thing, your spreadsheet will tell you that, of course, at this level, if the cost per head per kilometer used to be, let's say, 20 pesos, and now it's going to 22 pesos.
Exactly. Point well noted, Duncan. Thank you so much. That's Duncan Amo, Executive Secretary of the Chamber of Petroleum Consumers Ghana. They're calling for pragmatic ways of calculating cost of fares to help us appreciate when increases in fuel prices happen. We also had earlier speaking with us Stefan Abbas-Miezan, President of the Ghana National Chamber of Commerce and Industry. Dr. Eric Boache Yadom, Senior Fellow at the Africa Policy Lens, also joined us in the conversation on fuel price hikes and how this is impacting on the economy. Well, we'll dovetail now into our next topic for today, and it is the President and his entourage who are in the United Kingdom currently lobbying to put Ghana out there as a country that is ready for investments. The president has made emphatic statements at the Ghana-UK Investment Forum, stating that Ghana is ready for business and is ready to become an agricultural and manufacturing hub, moving away from the export of raw materials. We're bringing you excerpts of his speech earlier today.
Let me begin by expressing my sincere appreciation to the organizers of this summit, particularly the Ghana High Commission in the United Kingdom, Invest Africa, and UK Ghana Chamber of Commerce for bringing together such a distinguished gathering of business leaders, institutional investors, policymakers, and development partners. This summit comes at a defining moment for Ghana and indeed for Africa. Around the world, businesses and investors are reassessing supply chains, searching for resilient growth markets, diversifying investment destinations, and positioning themselves for the next era of global economic transformation. In that changing global landscape, Ghana offers something increasingly valuable: political stability, democratic maturity, strategic geographical access, improving macroeconomic fundamentals, and a government committed to creating a transparent and investor-friendly business environment. Ladies and gentlemen, Ghana and the United Kingdom share a long and evolving relationship rooted not only in our history, but increasingly in trade, innovation, investment, education, and shared democratic values. Today, bilateral trade between our two countries exceeds £1.5 billion pounds annually. But I believe this only scratches the surface of what is possible. The future of the Ghana-UK partnership must move beyond traditional trade into deeper strategic collaboration in manufacturing, in technology, infrastructure, agribusiness, renewable energy, financial services, pharmaceuticals, tourism, education, and the digital economy. This summit is therefore not simply a networking event. It is a platform for building long-term partnerships capable of delivering jobs, innovation, industrial growth, and shared prosperity. Distinguished ladies and gentlemen, when my administration assumed office, Ghana faced significant economic difficulties. Investor confidence had weakened, inflation was high, debt vulnerabilities had constrained fiscal space, and businesses were struggling in an atmosphere of uncertainty. We took decisive action through disciplined economic management, institutional reforms, fiscal consolidation, and enhanced coordination between monetary and fiscal authorities. We have restored stability and renewed confidence in the Ghanaian economy. Inflation has declined significantly from 23.8% in December 2024 to 3.4% as of April 2026. Our international reserves have strengthened considerably, rising from approximately $8.9 billion to nearly $13.9 billion, providing stronger external buffers and exchange rate stability. Interest rates are easing. The Ghanaian cedi has stabilized and appreciated against major international currencies, and Ghana's sovereign credit outlook has improved following recent upgrades by international rating agencies. Most importantly, business confidence is returning. These improvements are not abstract macroeconomic indicators. They translate into a more predictable investment environment, lower operating uncertainty, greater currency stability, and improved planning conditions for businesses and investors. Ghana's economy expanded by approximately 6% GDP in 2025, and our GDP has now crossed the 114 billion mark, making Ghana the 8th largest economy in Africa. Ladies and gentlemen, our vision is clear. We're building a productive, export-oriented, industrialized, and technology-driven economy that creates opportunities for our people and competitive returns for investors. At the center of this transformation is our flagship 24-hour economy initiative, and accelerated export development program. The 24-hour economy is not merely a slogan, it is a deliberate national productivity strategy that is designed to maximize the utilization of infrastructure, industry, labor, logistics, ports, and energy systems around the clock. It is intended to increase productivity, stimulate manufacturing, create jobs, boost exports, deepen regional trade, and improve competitiveness. We're aligning policy, infrastructure incentives, skills development, transport systems, power reliability, and financing mechanisms to support businesses operating beyond traditional working hours. This initiative presents enormous opportunities for investors in logistics, industrial parks, warehousing, cold chain systems, transport, agro-processing, manufacturing, the retail sector, ICT, and energy. Agriculture remains one of Ghana's most promising investment frontiers. Under our Feed Ghana program, we are modernizing agriculture and positioning agribusiness as a major pillar of industrial growth and exports expansion. I can see my Minister of Trade, Agribusiness and Industry is excited about that one. We're establishing agro-industrial enclaves across the country, improving irrigation systems, supporting commercial farming, and expanding food processing and agricultural export. The opportunities in cocoa processing, oil palm, cashew, shea, horticulture, poultry, rice production, fisheries, and cold chain logistics are extensive. For investors seeking scalable agricultural opportunities linked to regional and global markets, Ghana offers both the demand and the strategic location for such production. In manufacturing and industrialization, we are prioritizing value addition. Rather than exporting raw materials, Ghana is positioning itself higher within the global value chains. This applies particularly to cocoa, gold, lithium, bauxite, manganese, critical minerals, pharmaceuticals, textiles, automotive assembly, and petrochemicals.
And that was President John Dramani Mahama speaking earlier today at the Ghana-UK Investment Forum currently underway in the UK. And he stated emphatically that Ghana is ready for business and looking to become an agricultural manufacturing hub in the sub-region. Well, that'll be all for today's edition of Business Focus here on TV3. For more stories, please check out our website. It's 3news.com/business. Before I leave, a special good evening to an avid viewer of the show, 86-year-old Madame Lucy Opong. She is the mother-in-law of CEO of Dalex Finance, Joe Jackson. She loves the show. Good evening to you. She says I should smile more. I'll try and do that for you. Thank you so much for tuning in. As always, please stay safe. My name is Michael Obudu. Catch you same time next week.
Business Focus is brought to you by EcoBank, Telecel, ABSA.
You need a bigger space to grow your business. You need to be ready for any season.
You need faster checkout.